We are covering the 7 top actively traded stocks that are bullish today. While watching price actions, let us inform you our review on LCID. Lucid Group Incorporated is facing some challenges today with the announcement of a recall for certain U.S. vehicles due to a risk of unintended acceleration, which could potentially increase the chance of a crash. Any recall is never great news for a company, especially in the electric vehicle space, where safety and reliability are paramount for consumer trust. However, despite this setback, Lucid stock is actually up 2.76% today, which speaks to how investors are weighing the situation. Here's why. The recall news comes amid broader discussions around auto tariffs, especially in light of growing trade tensions. Lucid, alongside Tesla and Rivian, produces its vehicles right here in the U.S., giving it a significant advantage as tariffs on foreign-made vehicles increase. This production strategy positions Lucid well against competitors like GM, who rely more heavily on overseas production for their electric vehicles. Beyond this issue, Lucid is still a key player in the electric vehicle market, particularly with its luxury sedan, the Lucid Air, which continues to push boundaries in terms of performance and range. Even though a recall might temporarily rattle investor nerves, the larger trend toward EV adoption remains strong. Lucid's focus on cutting-edge, in-house technology and its vertically integrated manufacturing model continues to set it apart. Ultimately, while recalls are never ideal, Lucid's overall strategy and the favorable positioning of U.S.-produced vehicles in the face of changing trade dynamics are helping to maintain investor confidence. The stock's positive movement today reflects this balance between the short-term setback and long-term growth potential. Our review on iQIYI. iQIYI Inc. is seeing a solid boost today, up 5.8%. This comes after a period of mixed sentiment around the company, which is a major player in the Chinese online entertainment scene, offering everything from movies and TV shows to variety programs and anime. With its vast library of original and licensed content, iQIYI remains a key destination for entertainment in China, providing not just viewing options, but also a social media platform, iQIYI Paopao, where fans can interact with celebrities and the broader entertainment community. So why the surge today? Investors seem to be responding positively to recent moves or developments within the company, although specific news isn't always immediately clear. It's worth noting that iQIYI's platform is home to some big hits, like The Lost Tomb and The Rap of China, and if there's a new wave of hit content or partnerships, it could be fueling the optimism. The overall trend in the stock also reflects some confidence in iQIYI's ability to sustain its position in an increasingly competitive digital entertainment market. If the company can continue to grow its user base and expand its content library, this stock could continue to see positive momentum. It's still a space to watch closely, but today's gain is definitely a win for investors looking for potential in the streaming and content industry in China. Our review on RIVN. Rivian Automotive Incorporated has seen a notable 7.6% jump in its stock today, and it's no surprise given the recent shift in the auto industry due to new tariff announcements. President Trump's recent decision to impose a 25% tariff on all auto imports, with additional duties on auto parts starting in May, has created a lot of turmoil for foreign automakers. Companies like Mercedes-Benz and Porsche saw sharp declines, with shares dropping significantly as a result of these tariffs. However, Rivian, along with other U.S.-based electric vehicle manufacturers like Tesla, is actually benefiting from this situation. Since Rivian's vehicles are made in the U.S., the company avoids the impact of these new tariffs that would otherwise be levied on foreign-produced cars. This domestic production advantage is a key reason why Rivian saw such a strong rally in its stock today. Goldman Sachs analysts pointed this out, noting that Rivian's fully domestic production, along with Tesla's, positions them as clear winners in this new tariff landscape. This development is a major positive catalyst for Rivian, as it not only avoids the direct costs associated with the new tariffs, but also highlights the company's strength in the U.S. market. With electric vehicles gaining more traction globally and domestic production becoming an even more attractive feature, Rivian is in a great position to capitalize on this shift. As the EV market continues to grow and the tariff situation evolves, Rivian stock is looking solid for investors watching the sector. This rally today is a clear reflection of how the market is responding to these new dynamics, and it's a good sign for Rivian's continued momentum moving forward. Our review on Nu Holdings Ltd, the digital banking giant from Brazil, has been making waves lately, and its stock is up 1.56% today. Good news for investors keeping an eye on this fast-growing fintech player. So, what's behind this momentum? There's been increasing buzz around the idea that Nubank, which is the digital banking arm of Nu Holdings, could become the next global super app. For those not familiar with the term, a super app is essentially an all-in-one platform that lets you do everything, from banking and payments to shopping, socializing, and more. Think WeChat in China or Grab in Southeast Asia. Nubank has already built a solid foundation in Brazil, offering everything from credit cards to savings accounts, loans, and even life insurance. But here's where it gets exciting. The company is expanding its services to cover even more aspects of consumers' financial lives. If it can successfully integrate additional services like investing, shopping, and social elements into its already impressive digital banking platform, Nubank has the potential to become the go-to app for millions of customers, not just in Brazil, but globally. This move toward becoming a global super app could give Nu Holdings a serious edge in the competitive fintech space. Investors are starting to see the potential for massive growth, especially with the company's expanding user base and digital-first approach. With the stock up today, it seems like the market is also buying into the idea that Nubank could be the next big player in the global app economy. For those watching Nu Holdings, this could be a critical moment. If the company successfully pivots to this super app model, the stock could see continued growth, making it a strong player in the fintech space. Our review on TLRY. Tilray Brands Incorporated has had an impressive surge in its stock price today, climbing nearly 9%. So what's behind this rally? Let's break it down because it's a combination of legal victories and growing optimism around the cannabis industry that seems to be fueling the momentum. First, the legal victory. Tilray recently got some major good news on the legal front. A lawsuit that had been hanging over them for a while, filed by a Hexo shareholder, was dismissed in the Massachusetts Superior Court. This lawsuit had raised concerns about the way Tilray handled its acquisition of Hexo and a few other corporate decisions back in 2022 and 2023. The plaintiff had claimed that shareholders didn't get enough notice about these actions and argued that it led to financial harm. Fortunately for Tilray, the court disagreed, ruling that there wasn't enough evidence to support those claims. With this legal cloud now lifted, investors are clearly feeling more confident about Tilray's future prospects, and the stock has responded positively. But that's not all. There's also a broader boost in the cannabis sector that's contributing to Tilray's rise. Former U.S. Congressman Matt Gaetz recently talked about how cannabis reform is on the horizon, especially with the possibility of moving cannabis from Schedule I to Schedule III under the Controlled Substances Act. This move would be huge for the cannabis industry, lowering taxes, allowing more investment, and improving access for patients. While this is still in the works, the idea of reform has sparked investor enthusiasm, and Tilray, being one of the prominent players in the space, is benefiting from that optimism. Looking ahead, Tilray is gearing up for its Q3 earnings report, which is scheduled for April 8th. Wall Street analysts are expecting Tilray to report an improved performance compared to the same quarter last year, with revenue projected to grow by about 12% to $211.6 million. The company is also expected to show a smaller loss per share, which is definitely a step in the right direction. With the legal matters behind them and the industry gearing up for potential legislative changes, investors seem to be betting on a brighter future for Tilray. So what's the takeaway here? With a strong legal win and a favorable environment for cannabis companies, Tilray is positioned well as we move further into 2025. Investors are definitely paying attention to this one, and with its Q3 earnings just around the corner, it'll be interesting to see if the company can keep this momentum going. For now, things are looking pretty solid for Tilray Brands. Our review on AT&T Inc. has been on a solid run this year, emerging as the best-performing large-cap telecom stock, up nearly 2% today. What's driving this? AT&T's fundamentals have shown significant improvement, and the stock's defensive appeal is resonating with investors in this uncertain economic environment. The company has made strong strides in its core communications business, offering wireless, broadband, and fiber services. This has helped the company generate steady cash flow, which is key for keeping its debt manageable and investors happy. AT&T's continued focus on wireless and broadband services in the U.S., along with its expanding footprint in Latin America, has positioned it as a solid player in the telecom space. As more people shift to fiber and 5G, AT&T's investments in these areas are starting to pay off. Despite these positive fundamentals, retail sentiment is a bit more tepid, languishing at a 6-month low, which suggests individual investors may not be fully on board with the stock's rally just yet. That said, analysts are still relatively optimistic about AT&T's future. Canaccord Genuity recently reiterated a hold rating on the stock, citing a price target of $27.79, just below its current price of $28.20. This is in line with the broader analyst consensus of a strong buy, showing that while sentiment may be mixed, the professional community remains confident in AT&T's ability to deliver steady returns. So, what should investors take away from this? AT&T's rally this year is driven by its stable fundamentals, especially in the face of market uncertainty. While retail sentiment is not as strong, the stock's defensive nature and improving metrics make it a relatively safe bet in the telecom space. If you're looking for stability, AT&T's recent performance suggests it's one to watch. Our review on BTG. B2Gold Corporation is one of those gold producers with a solid reputation, operating mines in Mali, Namibia, the Philippines, and more, including the Goose Project in Canada, which is currently under construction. The company's big news today revolves around an updated mineral reserve life of mine plan for the Goose Project, along with a study to expand mill throughput. This is all part of their ongoing effort to improve production at the site, with an estimated cash expenditure of $1.54 billion Canadian dollars for construction and mine development. The announcement is exciting because it means B2Gold is enhancing its production outlook. The Goose Project is projected to boost annual gold output by about 300,000 ounces for the first 6 years, thanks to improved gold grades and recovery rates. This kind of boost in production is huge for the company, positioning them well in the market and giving investors a solid reason to stay optimistic. In fact, B2Gold stock is up 2.59% today, reflecting positive sentiment around these developments. B2Gold is really taking steps to enhance its value in the gold mining space, especially as it nears the start of commercial production at the Goose Project, expected by the third quarter of 2025. The improved reserves and resources at the site not only show potential for long-term growth, but also signal that B2Gold is capable of ramping up production significantly. For investors, this means more potential gold output, better efficiency, and a clearer path forward for the company's success. Keep an eye on this one as the Goose Project continues to take shape. Please subscribe, give the video a like, and watch more from our playlist. Thanks.